So let's follow up on that conversation now on our commodities segment. We have Nosike Wajide joining us now, analyst with Financial Derivatives Company. Hello, Nosike. Compliments of the season.
Wishing you the same. Always my pleasure to be here.
Yeah. So we see that there was a fall in the U.S. crude and gasoline inventories, and it was lower than expected. What drove that?
Basically, it's the consumers just, it's reflective of strong demand sentiment in the U.S. market. Basically, the expectation was for a drawdown of about 3.1 million barrels, and it turns out to be 3.6 million barrels. So the markets are now saying, okay, it's not the impact of this Omicron variant hasn't been as strong as the Delta variant. So all the uncertainty and that's beclouding demand is has sort of been blown away. So while that has happened, it's helped to prop up oil prices. There's also disruptions in some oil-producing countries. There's Nigeria just declared a force majeure at its Forcados terminal. There's Ecuador, where there's been some floods that affected the pipeline infrastructure. And in Libya, as much as 300,000 barrels per day has been taken off the market because of some political skirmishes and all whatnot. So those disruptions are helping to support oil prices at the moment. Then there's OPEC Plus meeting on January the 4th. That's on Tuesday. So markets will be waiting to see if OPEC would change its okay, OPEC the plan is to increase output by 400,000 barrels every month. So last month it maintained 400,000 barrels per month, and markets will be waiting to see if that is altered. I doubt if that would change. I mean, if
you think they'll just keep on?
I think that OPEC have resolved to, given that they waited to see how the Omicron variant would, the impact it will have. Waited to see the impact of U.S. and its allies of big oil consumers and their strategic reserve, what they did with their strategic reserve, but it's not had the impact that the U.S. thought it would have. So oil prices have rebounded to just below $80 a barrel. So that's good news for OPEC. So OPEC will just continue easing its production curves, 400,000 barrels a day, and hopefully it's hoping that oil prices would sort of remain the same, even as supply chain bottlenecks in major countries at the ports continues to cause an energy crunch, and this is also supporting oil prices at the moment, poised to support oil prices for the next couple of months as well.
I know some weeks ago, the price of gas was also a factor, that was affecting. Is it still a factor?
Oh, yes. At the moment, the price of gas is still about 10,500 naira for a 25 kilo cylinder, a 12 kilo cylinder, sorry. That has to do with the global energy crunch. Nigeria is a net importer of LPG. As long as the LPG price globally remains high, it will continue to be at that price. The NNPC has plans in place to sort of boost domestic supply. If you can do that, then the price would taper downwards. But at the moment, Nigeria remains an importer, and prices remain about 10,500 for a 12 kilo.
And our budget, we're expecting it to be signed tomorrow by the president, and our benchmark is now at $62.
Oh yes,
that's close.
That's optimistic. It's optimistic because the average price for the year has been about $70 a barrel. The oil, January 1st, oil was about $50 a barrel. Now it's 78, 79. Average price of 70. So there's that optimism.
So you don't see it going below that?
I think OPEC have finally found their voice after some years in the doldrums, where a lot of people thought that at some point OPEC was becoming irrelevant. But they've spoken with one voice, and it's a united front, and they continue to make it known to the markets that they are willing to do whatever it takes. Whatever it takes, even it means the big producers, the Saudis, the Russians, cutting production just to prop prices up. They are willing to do that.
Yeah, because I'm thinking also that if OPEC sticks to its plan to continue increasing, by 400,000, don't you think it will affect price eventually? Because we still have the threat of Omicron.
Oh, yes.
Some countries are subtly reintroducing restrictions.
That's why they have these meetings a month in advance. The meeting in January is for production in February. So they meet in January. They weigh the situation in the global markets. If there are threats and they see that, okay, look, there's a threat of increased supply relative to demand, then they start to, okay, we could have maybe another emerging meeting before the beginning of February and see, okay, do we put that much oil in the markets? What do we do? They just strategize as it were with the facts available at the time. And like I said, they are willing to do whatever it takes, if it means increasing, if it means reducing. And the markets now know that's what OPEC plan to do. I mean, when oil prices fell to lower than $30 a barrel last year during the coronavirus, also OPEC did, and then with one united voice, united front, they propped oil prices back to what we have today. So it's clear that they're willing to do whatever it takes, and markets will take you from that.
What's happening in Nigeria now? Are we are we able to now meet up, even with the force majeure now, meet up with our quota?
The quota is about 1.67 million barrels a day. At the moment, we're producing, last official figures were about 1.4 million barrels a day, which was an increase from the previous.
1.2.
Yes,
it was 1.2 for a long time.
Yes. So now that we have this force majeure, it's probably going to go a bit lower.
Go down, maybe back to 1.2 or something.
Depending on how much oil typically flows out from the Forcados terminal. But what it means that, OPEC also take that into consideration. The markets have taken that into consideration. That's also helping to prop up oil prices at the moment. But Nigeria's quota stands. At the meeting next week, they'll review that quota. It may even be reviewed upwards. But it's an incentive for Nigeria to get its act together and stop all the vandalism or whatever it is that is.
So we have the opportunities for us to
increase oil production. Nigeria is more production sensitive and price sensitive at the moment.
Okay, and then we had a story some days ago that cash in circulation is up by 6.2%. That's about 3.15 trillion naira. What's the implication of this?
This is happening at the time when we have an increased adoption of e-payments, instant payments as well. So on the one hand, the CBN has the cashless policy, trying to drive people away from cash, trying to get people to electronic platforms. That was accelerated last year because of COVID and movement restrictions. A lot of people started transferring, less use of checks. So it's somewhat counterintuitive that cash in circulation is also rising and has breached the 3 trillion threshold. That could also be attributed to the festive period where people demand cash. Some payments, obviously, you can do electronically, but because of festivities, I want to spray money, which somewhat illegal. You might want to spray money and you demand cash. And some businesses are cash heavy. If you want to buy cattle, you want to buy sheep, those guys don't accept checks or electronic payments. So
it's a pity because in Kenya, even tomatoes, the little one you can do a POS.
Kenya is actually one of the more advanced places globally when it comes to mobile payments. Yeah, they're actually more advanced than some advanced countries. It's almost a nationwide adoption of mobile payments. The ease and convenience has been adopted, and it's working for them. It's something Nigeria could aspire to.
Can e-Naira do that for us?
E-Naira is a digital currency, as it were. There's still a lot of skepticism by Nigerians. There's increased adoption. It has its benefits, but some of the cons Nigerians view, or some things Nigerians view as cons, is that the government having access to their financial data. You can see all my transactions. You can see, some people are just uncomfortable with that scenario. So it's something that will take a bit of time, but eventually, because when you think of it, the banks have access to your financial data. The government can demand these things from the bank. So in time, it will just gain traction eventually.
So you think e-Naira can help us, deepen this financial inclusion that we are seeking?
Oh yes, e-Naira technology basically is what will drive financial inclusion. What will drive the people? I think the fastest way is the use of mobile phones. If the e-Naira, will it work on a 2G phone? Can I use a 2G, like mobile money? Mobile money is something in the rural areas can gain more traction at time than e-Naira or anything that is really digital. So, because you need a 3G or a 4G, a 5G phone to get digital. With a 2G, where it's just text messaging and all whatnot. That's the advantage you have in Kenya. With just 2G technology, they can manage all that mobile money transfer and all whatnot.
I think some of our mobile money platforms have that.
Yes,
also.
But it's not gained the kind of traction that it has obviously in Kenya. But it's something that, if driven the way it should, it could gain traction.
Do you think it's enlightenment that the people need?
Yeah, there's enlightenment, and people have, like I say, there's a trust deficit. And when the government is trying to drive something, people fear it. If it's the private sector, okay, you come, you listen to bankers, they say this, and that. Okay. Then again, some banks would just rather outsource the rural areas. How much do these people really have? Let's get the ones in the urban centers. And 2G technology.
Meanwhile, the population is
actually more
in the rural area.
But obviously, the money, the financial muscle is in the urban centers, and that's where they will concentrate.
And then we see that Naira appreciated 567.
Yes, this time of the year.
If it's still,
yes.
if it's still at 567, that is.
The thing is, this time of the year, there's typically an increased forex inflows from visiting friends and families, the IJGB. So, and there's less demand, especially from the manufacturers who are their facilities are undergoing maintenance at this time of the year. So, and wait till January before we see increased demand for inventory buildup. So at this time, there's relatively lower demand and relatively higher supply. So we would see the Naira, it might even appreciate even further in the coming days.
All right, so what's going on? I mean, commodities, prices, are they still up? Are they tapering? Do we have as much demand as we had, not last year. Last year is like, let's gloss over it.
For the staples, obviously, for rice, for gari, because we have an influx of people from overseas, there's increased demand for rice. It's the festive season. There's increased demand for rice ordinarily because it's the festive season. And influx of people, increased demand for rice as well. So rice prices, the price of a bag of rice are up to about 30,000 naira. As opposed to about 28,000 naira last month. For imported commodities, because we're seeing an appreciation of the naira, imported food commodities would be slightly cheaper.
I think very slightly.
Slightly cheaper, obviously. Then for the onions, the peppers, the tomatoes, and even beans, because it's the harvest season, there's increased supply relative to demand, so prices will taper down a bit. But as soon as the harvest season wanes, this is December, by January, we should see that effect weighing off, and
but we visited the market last week, Malta, which is a major food, and didn't seem like the price was tapering. And also, I think the tightness in liquidity has also affected it.
Yes, there's consumer resistance. When prices keep rising, at some point people will stop buying. We're not just going to buy because we have to. I mean, we're limited or constrained by our own budgets, and the Nigerian consumer has taken quite a beating in 2021, and hopefully 2022 is better. So at some point, consumer resistance kicks in. People stop buying. The price will fall just to, because it's
just to see if they can get
tomatoes and pepper. They're perishable. They will spoil if people don't buy them. So at some point, the demand will meet the supply.
And then we still have the conversation of preservation and all that.
Yes, all of that. So you want to offload as much before it's. So storage is something that, in the future, if it's something you solve, because it's a major problem. A lot of perishable goods, not agri-commodities, as much as 50%. Is completely taken off the market because you can't find a way of taking it from the farms to the markets without half of it
especially when the market
away.
Is in another state.
Exactly. And most of these agri-commodities are grown up north. So bringing them down here, as much as half of it is taken off the market because you can't find a way of preserving them, storing them, and bringing them down south.
All right, Nosike Nwanjide, thank you so much for being a part of our conversation this morning.
Always my pleasure.
And well, let me wish you Happy New Year. It's just a couple of days away, and I know I'll see you again. Yeah, see you on the other side. All right, thank you so much. All right, after the break, the all-important issue of taxation and finding a balance between revenue generation for the government and making the investment climate friendly. That's after the break. This is Business Morning on Channels Television.